What is up, y'all boys? I will be going over price action on NASDAQ and the S&P. If you guys were to have watched my last two videos, you'll get a better understanding of what we're going over here. I filmed a market buys video, and I also marked up a video where I would have technically entered my trade. Obviously, today I didn't enter a trade, but I'll still be going over potential trades. Today we did have pretty decent price action. I know looking at it right now, right, maybe it looks a bit not so good, but I'll still go over, our confluences and how we could have entered a profitable trade. So essentially, first things first, on NASDAQ, don't worry about this S&T. I'll go over that here on the S&P where we could have taken another trade. But basically, if we scale up to the 1 hour, we will see that we have this huge fair value gap form pre-market. This right here is our order block, so the move up prior to the liquidity sweep. We technically have liquidity lying up here, and so this was a sweep that we obviously saw. So that's our order block, and then we have a fair value gap. So honestly, this area right here, I'm expecting us to possibly get a retrace market open. So if we scale down to like the 5 minute, we'll get a better understanding of how price was actually moving at that time. So basically, we move up into the fair value gap. We don't close above the fair value gap at all. And so right here, this is a pretty good area, right? A high confluence area for price to retrace back to the downside. And so we see this order block, we see this fair value gap, price taps into it, and a reasonable area to have entered. I'm pretty sure this is the area that I was talking about in my last video. I was hanging around somewhere over here, and I said, all right, this is where I would have entered. And so basically what we see here is we see well, first of all, we see an SMT form. Obviously, that's not really a confluence for us on the NASDAQ, but we do end up seeing this off of this candle closure, the black candle closure. We see the SMT. However, the main thing I'm concerned about is these two candles down, right? We see some selling pressure, and then we get a retracement, and then we get a break of structure on the 1 minute. So after we get a break of structure on the 1 minute, I would have entered. And to be honest with you guys, I had my take profits. I showed you guys this. I had my take profits somewhere over here where it did not end up getting hit. So we were very close to taking, we got very close to where we would have taken profit, but we didn't. And so price continued upwards, okay, and then we formed these two fair value gaps right here. And so even if price closes above this fair value gap, I'm not too concerned because I have another fair value gap. And so after that, we see price consolidating around this area right here, and I'm not too concerned, honestly. I'm like, okay, we'll just see how price ends up going. I'm not gonna make any emotional decisions to take profit here, right? And so, but I do end up moving my take profit up to right here, around the equilibrium of this fair value gap, because we did break structure to the upside on the 5, or honestly, I think it was the 15 minute. We did end up breaking structure back to the upside, so obviously, I wasn't expecting price to come back all the way down to here. So I just moved it up a little. I expected price to retrace back into this and then probably just keep going back up. And so we're still hanging around this area, but we would have taken profit if this is where we would have placed it. I placed it a little bit above the equilibrium. And so we have a fair value gap here that we're trying to retrace back into. And honestly, this is not even a fair value gap. This is a BPR. So this is a pretty strong area for price to retrace into. And we just mark up our equilibrium right here. Boom. We would have taken profit right there. And so basically what we have here is a high time frame confluence, which is our order block and our fair value gap. We take a trade based off of that, and we do end up putting our take profits where, a reasonable area, right? A mistake that I made yesterday was I completely disregarded any confluences at all. I simply just put it where liquidity was. However, today this was a pretty strong area, in my opinion, for price to come down to, and it got very close. However, my take profit after that fact that we ended up coming back up was a pretty reasonable place to have placed it. I mean, we placed it at the equilibrium of the fair value gap. So I think that was a pretty good decision in my opinion there. And then moving on to the S&P. I was talking to you guys about how I had an SMT right here. This one right here would be our lagging index, so this would be a confluence for us to enter short. And so if we scale to the 1 hour, All right, so first and foremost, we see this whole move up. We see this retracement down. And actually, let me mark up market open. So this is our market open. And so again, same story here. We see this whole leg down, fair value gap. And so after we come up to here and we actually get confirmation on the SMT, I'm thinking, bro, this might be a pretty good area to enter. Not only because it was an SMT, this was actually a very, very textbook trade in my opinion, because of the fact that we formed this SMT. We have liquidity laying literally right here, this liquidity. We end up sweeping it, and then we get confirmation of the SMT on this black candle. So then we could basically, same story as the NASDAQ. We get the confirmation that it's an SMT. We get confirmation that we're getting selling pressure from a liquidity. And then we get the retracement on the 5 minute. Then we get the break of structure to the downside on the 1 minute right here. Boom, we enter right here off the break of structure on the 1 minute. And also a break of structure on the 5 minute. And so I'm thinking that's pretty high confluence in my opinion. And so where would we have placed take profits? After the fact that price developed, obviously I don't think I was looking at it too much when price was actually around this area. But after I look back at it, I'm like, all right, bro, where could I have put my take profits, right? If I went straight to the 1 minute, 15 minute and mark up my draws on liquidity, it would have technically been somewhere like down here or something like that, right? But however, we do have, all right, first and foremost, right, we have this fair value gap, right? We have this fair value gap right here. We have this fair value gap, and we also have another fair value gap right here. This is a smaller one. Okay? And so no BPRs here technically. Yeah, no BPRs. Or actually, wait. BPR here. Technically, this would have been a small BPR, but whatever. And so we see price on, what was I talking about? We entered short, so if we go down to the 5 minute again, I guess this is irrelevant for us right now, but if we go down to the 5 minute, this is where we would have entered. So we see the selling pressure, like I said, the retracement, break of structure, back to the downside, and then where would my take profits have been? It wouldn't have been down here. We see a little mini draw on liquidity on the 5 minute. You guys know me. I don't like to put my take profits off of 5 minute draws. However, a more reasonable thing to say would have been to say like, all right, bro, we got this. I think it was actually 1 hour fair value gap right here. Or maybe it wasn't. Maybe it was a 30 minutes. So we end up seeing this right here. And if we were to have taken it off of this. Hold up, boys. Let me actually just check my chart on my phone real quick to see what I ended up marking out. Essentially, it was just a fair value gap right here, I think. Oh, no. No, that's completely wrong. It was equilibrium. What time frame is this? The 5 minute. So if we were to have taken the equilibrium of this right here, of this move up, we would see price ended up retracing into this area right here, which is equilibrium, and then price continues back on its up move. Sorry about that, guys, but essentially, yes, you don't want to put your take profits down here off the 15-minute draw, simply because do we really expect price to retrace or come back all the way down to here? No, probably not. I mean, we probably just expect it to get a retracement into equilibrium, correct? And so, and this is also an area I think of that we had a fair value gap here. This whole thing is an imbalance, correct? Because it's kind of hard to see over here. But if we go into the 15-minute, right, we get we got a pretty good idea, right? We have fair value gap here, fair value gap here, fair value gap here. So this is a pretty strong area, maybe somewhere in between, because we see so much buying pressure for price to at least retrace back into and then continue back upwards. And so price did retrace back into this area. However, right, like, are we going back upwards? Not really, right? We're still on the downwards move. And so obviously this is because at this time in the day, you know, price just consolidates. So that's why we want to take the trade off of the like around 9:45 to 11, sort of. So yeah, boys, that's basically price action on Nasdaq and the S&P. So yeah, main takeaways would be, all right, bro, look for your SMTs, right? Look for your SMTs. If you're on the lagging index, right, try to find what we said, right? This was perfect today because we had liquidity here. We had the selling pressure, we had the retracement, we had the break of structure to the downside, and then we had take profits at equilibrium, right? We don't want to put take profits down here because, I mean, do we really think so? And so that's basically it for the S&P. And then on Nasdaq, I already went over it, and I did predict Nasdaq to be bearish. If you guys watched my first video from today. But yeah, right, guys. Like, we see all of this, and yeah, I mean, sure, we open up bullish, but I'm thinking bearish after the fact that we retrace back into this confluence area, correct? And so I'm thinking bearish from here, which is what we actually ended up seeing after that, okay? And so again, today off of this, you know, we see fair value gap, we see order block, we see the same story. We see selling pressure, retracement on the 5-minute, break of structure on the 1-minute, enter, and then take profits. I honestly don't think it was incorrect to have placed my take profits somewhere around here. You know, it was just, I guess, bad luck that I didn't put it up a bit higher. And so, but at the end of the day, right, I mean, it really doesn't matter too much because we would have ended up taking profit successfully based off of me putting my take profit off of the equilibrium of this fair value gap right here. And so, and essentially at the end of the day, we did not end up entering a trade, but it's good. It's still good to reflect on, you know, what we could have done, what we would have done wrong. And so, yeah, boys, that's basically it for me today. I'll see you guys in the next one.